Cash Studio.
Hi guys, good morning and welcome to the CNBC-TV18 eBix Cash Studio in the Mumbai News Center. I'm Pavitra Parekh. You're tuned into Power Breakfast, and let's get started by bringing you all of our top stories. Wall Street snaps its three-day winning streak as investors turn cautious ahead of November's inflation data. The tech-heavy Nasdaq leads the fall, correcting over 1%, while small caps too see some deep cuts. Stocks in the Asia-Pacific region decline as investors look ahead to U.S. November inflation numbers. Chinese realty major Evergrande defaults on $1.2 billion worth of debt, resulting in a restricted default rating from Fitch. The SGX Nifty, meanwhile, indicates a negative start for the Indian indices. And crude moves lower on fears of lower demand from China after Evergrande is named a defaulter. Measures taken by governments to combat the spread of the Omicron variant also contribute to demand concerns. And one of India's largest footwear retailers, Metro Brands' 13,600 crore IPO opens later today. The issue price between 485 to 500 rupees a share will close on the 14th of December, with the company eyeing a post-issue market cap of a little over 13,500 crores. All right, so those were all of the top headlines that we're tracking, and we will come back to all of those individual stories. But first up, let's take a look at what's happening as far as the global picture is concerned. It is looking like a negative start for the Asian markets, right? So pretty much across the board, you're seeing a red screen for Asia. The Japanese market's down 150 points. Hang Seng is up on your screen around 100 points lower on that index as well. Taiwan, again, is seeing cuts of around 90 points over there. So it's looking like quite a weak start for the Asian markets, of course, reflecting the kind of losses that we saw on Wall Street as well. I'm going to take you through a few more. So Kospi also is down around 0.5% right now. So that one is seeing some cuts. Shanghai around 0.3% lower as well. The SGX Nifty will come up for you, and it is indicating a negative start for our own markets. It's not looking as bad as the rest of Asia right now, but it is around 17 points lower on the SGX Nifty. So that's what's happening in the Asian markets, but let's also talk about the US now. Wall Street ended Thursday's trading session lower after a three-day winning streak. So the Dow Jones was mostly flat. The S&P 500 was off around 33 points. And the Nasdaq, that one was the big underperformer. It lost around 270 points at the close. CNBC's Kate Rooney is standing by to get us some more action from Wall Street.
U.S. markets closing mostly lower after a three-day winning streak. That's despite jobless claims falling to its lowest level in more than 52 years. The Dow pretty much flat on the session, the S&P off 33 points, and the Nasdaq down 269. The world's most valuable digital bank making its initial public offering on the New York Stock Exchange today. Shares of Nubank opened at $9 and tacked on 14%, closing above $10 a share. The Brazilian bank was backed by 36 pre-IPO investors, including Warren Buffett's Berkshire Hathaway. American Airlines reducing international flights next summer. That's because of delayed deliveries of the Boeing 787 Dreamliner, which has faced ongoing manufacturing issues. Boeing will compensate American for the losses. Shares of Boeing and American Airlines down slightly on that news. And Starbucks employees in Buffalo voting to unionize after strong opposition from management. That's the first time a union will represent workers for the coffee chain in the U.S., and the company has resisted unionizing since going public nearly 3 decades ago. Shares of Starbucks down a little less than 1% on the session.
All right, Kate, thanks a lot for getting us all of that action from Wall Street. But sticking with the U.S. then, the important macro data from the United States. Weekly jobless claims for the week that ended on December 4th came in at a total of 184,000. This is the lowest in over 52 years. And all of this ahead of the week's CPI numbers, which are expected later today. CNBC's Rick Santelli is standing by to get us all of the highlights.
Initial jobless claims for the week of December 4th. 184,000, a nice drop, and so far no revision of last week's 222, and it is a post-COVID low. If we look at continuing claims, 1,992,000, 1,992,000. It is not a post-COVID low. Last week remains that way. This is the week of November 27th. It's always a week in arrears to initial claims, and last week, at least at this point, still unrevised. Well, there it goes. It's not revised. 1,954,000. So it's still a bit lower, but these are pretty good numbers. Let's put it in some context. If we go back to March of 2020, Continuing claims were 1,715,000. Not so far off. And if you look at all of 2019, as the Wall Street Journal did for us today, the average per week on initial claims was 218,000. So we are definitely getting in the right zone for these numbers. And maybe the most important issue is it's not so much about claims, it's more about employers are certainly reticent to let any employees go, considering we have basically a deficit of workers to put in those slots that remain open and can't find people to fill. This is a huge dynamic, but I would caution, this isn't a dynamic of the United States, it's a dynamic globally.
All right, Rick, thanks a lot for getting us all of those highlights. But that's what's happening globally. How will all of these overnight cues impact our own market? We have our research team joining in to take you through exactly that and tell you what the trade setup looks like this morning. Rima, Nupur and Agam all join me now. Hi, guys. A very good morning to all of you. Rima, I'm going to come across to you first, as always. Take us through the cues that we should watch out for, because Wall Street has pulled back after 3 solid days.
Absolutely. So the global cues are muted. In fact, there are a lot of them to track. So first, in terms of the key indices performance in the US, the Nasdaq was down 1.7%, the S&P 500 losing close to about 0.7%, snapping a 3-day winning streak. All eyes will be on the US November CPI inflation, which potentially could throw up a figure of 6.7%, according to estimates, the highest level in the last 40 years. That said, the economic data which came overnight, the data on initial jobless claims for the week ended 4th of December, was better than what the street was anticipating. Investors continue to watch, with the research coming out of Omicron. The latest study, which has been conducted by a Japanese scientist, has found the new strain to be 4.2 times more transmissible in the early stages. And as you pointed out, Evergrande issue continues to remain top of mind. For our own markets, it could be a sluggish start. That's what the SGX Nifty is suggesting. And yesterday, you had the FI selling about 1,600 crore in cash, while the DIIs bought 800 crores. Back to you.
Okay, Rima, thanks a lot for laying out all of those cues for us. But let's also talk about the stocks that we should keep on our radar today. And Nupur is standing by with that entire list. Hi, Nupur.
Good morning, Panja. Let me start with the big boy Reliance. The partly paid up shares of the company will be available for trading from today. This would mean increase in free float. Also, it will lead to positive adjustment in MSCI, FTSE, Nifty weights in future given the increased free float. So keep an eye on that stock. 3 stocks from pharma space will be in focus. Spark as in company in its conference call indicated that they are focusing on cost control measures. Cash on hand currently is 12 crores. So watch out for that stock as well. Dr. Reddy launches one of its tablets in US. The market size for this particular tablet is around $51 million. So watch out for that as well. Marks and Pharma, where company gets UK MHRL approval for one of its capsule. So positive news coming in there as well. Moving on to then Bajaj Electricals, where company to review corporate structure to unlock value and also to consider housing power operation as separate entity. An update from BC Primary Market, where Shriram Properties IPO closes today. It subscribed 1.63 times so far. MapMy India IPO saw good response, subscribed 2.02 times on day 1. Metro Branch IPO will open today. And lastly, Star Health will list today.
Okay, Nupur, thanks a lot for taking us through that entire list. We will keep all of these on our radar. And finally, let me hand it over to Agam, who's looking at all of the cues from the futures and options space. Good morning.
Good morning. Well, the cues were a tad muted, but this is only in relation to what we've seen in the previous 3 days. What we did see in the Nifty futures is an increase of around 2.5%, and the Bank Nifty futures did see a little bit of unwinding coming through. A lot of the longs build up on the last 2 days were unwound as far as the Bank Nifty futures go, because the open interest declined by around 3.3%. There wasn't as much activity from in terms of changes in the index futures from an FIR standpoint, because we did see them add about 1,100 contracts towards the long side and about 2,500 contracts towards the short side, but that still keeps their long positioning at around 70% mark. 72% mark. Moving on in terms of the most active options, well, we are moving into the new expiry, so the range is a little broader for now. 17,500 on the lower end, where we did see a lot of writing in puts, and 18,000 on the upper end, where we saw writing in calls. But do remember, these two options also have the most in terms of open interest at this point in time. And finally, coming down to a couple of stocks. First source, GMR Infra and Granules see fresh longs.
Okay, Agam, Rima, Nupur, thanks a lot for joining us and prepping us up for this trading session. But with that, we get into our first short break on this show. Up next, Welcome back. You're still watching Power Breakfast on CNBC-TV18. Now, as always, let's get you the latest on the COVID front. India's daily COVID tally remained below the 10,000 mark for the 13th day in a row. This even as the number of fresh infections rose to 9,400 on Wednesday. Now, active cases also saw an uptick after 5 days. However, the number of Omicron cases remained unchanged at 23. So those are the broad COVID numbers that we're tracking. But let's also speak about vaccination now. Timsy, my colleague, is standing by with a reality check on the vaccination drive in the country so far. Timsy.
As India comes close to a year since COVID-19 vaccine was approved by the Drug Controller General and just a little over a month left to be 1 year since vaccination drive was launched in the country, here is a reality check as to where we are in terms of the eligible population getting vaccinated and how far are we from the targets being set. It was on 9th of November when Union Health Minister Mansukh Mandavia had taken a detailed review. He had set a target for all the states and union territories to vaccinate all those eligible for getting a jab, or to be precise, vaccinating 100% adult population at least with the first dose, and those eligible for a second dose to be covered by 30th of November. Now let's look at the numbers first. As on 9th of November, total doses administered were around 109.08 crores, covering 79% of adult population with first dose and only 37% of adult population with the second dose. Exactly 1 month since the target was set by the Union Health Minister, as on 9th of December, India has administered 130.39 crore doses, inoculating 86% of adult population with the first dose and 53% of adult population with the second dose, thus actually showing a gap that India is still far away from meeting the target of inoculating at least 100% adult population with the first dose itself, only post which vaccinators can focus on complete coverage of the second dose. Not just this, in terms of the expenditure incurred by the government on procuring vaccines to be delivered free of cost to all the states and union territories, well, the government in union budget had set aside 35,000 crore rupees for this task, and as per the response given by the Union Health Ministry in a parliament question recently, government has spent only 19,675 crore rupees till 27th of November.
All right, Timsy, thanks a lot for bringing us up to speed on what's happening as far as the vaccination drive in the country is concerned. But let's now talk about the primary markets. The IPO of Metro Brands, one of India's largest footwear specialty retailers, opens for subscription today. And Agam is standing by to take us through all of the details on this. Agam.
Right, so Metro Brands, which is into premium footwear, is set to launch its IPO, and which will open today and will end on this coming Tuesday in terms of the IPO subscription. The company operates about 598 stores across 30 Indian states and union territories. So it does have a significant presence pan-India. In terms of the issue itself, the price band is 485 to 500 rupees per share, with the issue size itself on an upper band comes to around 1,368 crores. Now this is divided into two portions. 295 crores of this near 1,370 crores is for fresh issue, and the major chunk, that is nearly 1,070 odd crores, that is an OFS, where a lot of these promoter entities are giving in their shares for sale. Post-issue market cap will be around somewhere around 13,300 500 odd crores. And in terms of the objects of the issue, that is a fresh portion of the issue. A lot of this will be used on new stores under brands such as which are owned by the companies such as Metro, Mochi, and Walkway, and Crocs, which is a third-party partnership with the brand. And a lot of this will be used for that to the tune of nearly 225 crores. The only concern here is that growth has been problematic, but of course the company has been through the pandemic, and besides that, a price to sales ratio of around 17 times, it just looks a tad pricey in comparison to some of its peers.
Okay, Agam, thanks a lot for getting us all of the details on Metro Brands. With that, it's time for another short break on the show, but you don't go anywhere. We'll tell you what's happening. Welcome back. You're still watching Power Breakfast, and as promised, let's talk about the commodity space. Manisha Gupta joins us with a quick update. Hi, Manisha. Good morning. What are you tracking today?
Pavitra, thank you for that. I'm looking at the U.S. inflation data expectations today. That's ahead of the FOMC meeting in the next week. So the data that comes out today is going to be quite important. Ahead of that, we have seen the U.S. dollar strengthen further, and that is weighing on commodities. I want to talk about gold and silver today, where you have the gold prices continue to trade below $1,780 per ounce. 1,800 has been a resistance for some time now. But even deeper decline is what we are seeing in silver. That is trading at 10-week lows, below $22 per ounce. And silver had hit a 10-year highs at $30 per ounce in this year itself. So we are 25% off from those kind of highs. And silver is on track to post a worst yearly loss since 2014. So it clearly hasn't been the year for precious metals when you look at 2021.
Okay, Manisha, thanks a lot for getting us that quick update. We do have to take your leave on this edition of Power Breakfast. The Asian markets are pretty much all lower right now. The SGX Nifty is quite flat. It's just around 10 odd points in the red. But that's all that we have time for on this edition of Power Breakfast. Thanks for tuning in. Bazaar Morning Call comes up next.